Hello everybody, Jonathan Lerner here, your Vancouver-based realtor with Vancouver Life and eXp Realty, and today is the first of the monthly market updates that I'm going to be doing moving forward, and they are all going to be based primarily around the Greater Vancouver area, and we're going to dive into the different stats from sales, new listings, inventory, where are prices going, what is the sales to active listings ratio doing, and where is that basically predicting that prices and things like that are going to move. And of course, what are my predictions and where is the market heading so that you can be more prepared and be able to take this next step that you need to be as profitable or get the best deal that you can, whether you are a buyer or a seller. All right, so let's dive in. These market updates are basically, they're released in the first week and a half or so from the real estate board. And then I take those stats and break them down into easier to understand chunks, and so that you can understand how things are happening or what's happening in the market and how that affects you. So June numbers are in. We're looking at 2,244 sales in the month of June, which is a 35% decrease from this time last year, and is a 16% decrease from just last month alone. This is also a 23% decrease over the 10-year average. So this is a massive, massive slowdown in what has happened in the market over the last few months. And June was a big hit. And you can also very much expect the same type of situation to be well below the 10-year averages and slower sales over the next couple of months as we head into summer. Now, we were 23% down on our 10-year averages and 35% down from this time last year. The Fraser Valley was 43% down, and Toronto was 41% down on their sales. So this is happening across the board, and the biggest areas of impact where this is really being felt, and it's going to be with respect to the pricing as well, which I'll touch on in a little bit, is going to be the areas that saw the greatest inflation in sense of prices and the greatest popularity, which was the outskirts. A lot of the suburban areas that blew up, like a Chilliwack, like the Island, like the Greater Toronto area suburbs. Those are the ones that absolutely blew up, but they're also the ones that will, because they got pushed beyond what their actual market value was worth and what people were willing to pay, or granted, a lot of people did pay it, they saw the greatest, 40, even 50% increases in their price. Those are the areas that are going to get hit the hardest when it comes back down for that correction in terms of our pricing. So just to kind of clarify and lay that foundation for you. Now, this is going to be the first summer that we've had that's been the most pre-COVID-like summer that we've had. So we can absolutely expect these numbers to continue to be on the downward trend in terms of sales and pricing over the course of the summer, because there's also another big announcement coming from the Bank of Canada, which I'll touch on shortly. All right, new listings that came to market. Just over 5,250 new listings came to market. It's still a 10% decrease compared to this time last year, and it's a 17% decrease compared to May, which is also still pretty standard for June, because people are starting to get ready. They don't want to list right before summer if they think that they might not have a good product that can sell quickly. So May is typically a pretty big month, and June is decent, but it starts to slow down near the end of the month. So that is going to be a decrease compared to May. Now, our current inventory that is listed for sale is 10,425 homes. We got it's a 4% decrease from this time last year, and it's an increase from May, but only 4.1%. The way that sales have decreased, 23% below the 10-year averages, 43% in the Fraser Valley, 35% in the Greater Vancouver area. We can absolutely expect that inventory is going to climb, but new listings always slow down over the summer as well, and it's typically the quietest time outside of the Christmas season for new inventory. So we can expect that inventory will still continue to be low. Might be hard to even crack that 11,000 mark. And just to give you an idea, to get into balanced market territory, we got to be closer around 15, maybe 16,000 homes on the market listed for sale to be moving into a balanced market zone across all property types. So we are still a ways away from that. And otherwise price corrections could be even further, but we're not quite there yet. Now, sales to active listings ratio. This is a leading indicator that is very indicative of where prices are going to go. When it is above 20%, that means that more than 20% of the homes that are listed for sale get purchased. And so anything over 20% is considered a seller's market. And you've heard that term over the last 2 years, that is a crazy seller's market, hot market, because everything has been over the 20% range. Now we are still there at 23.4%, but some changes are definitely happening and we can start to see that. Detached homes have officially fallen into the balanced market category, all right? That means that you, as a buyer, have a whole lot more negotiation room. You can put in subjects there pretty comfortably. And now, not every listing, but we are officially in balanced market territory with detached homes, which is great. Townhomes and condos are still quite busy at 31% and 30% sales to active listings ratio. So of everything that's listed for sale, over 30% of them are being bought in the townhouse and condo market. All right, and this is one of the things as well. So the detached home market is expensive. You know, the average home is over $2 million for a detached home. And with the interest rates rising, people's ability, their purchasing power has reduced. So where things are really actually heating up is in the lower price ranges, from the $500,000 to the $800,000-$900,000 range is very, very busy right now, and is still an area that you may find yourself in a competing situation. Now, as we're into summer now and we're getting right in the midst of it, that's going to be less so. It's just the nature of the market, what happens during this time, but that is a busier time frame. Pricing. Average price for all residential properties, $1,235,900. That is still up 12.5% from this time last year. At the same time, it is a full 2% decrease just over May alone. So that is a big decrease to happen in just 1 month, and it is indicative that we will see more decreases as we typically go into the summer here as well. All right. Detached home sales are down 44%. All right. It's a very expensive product, and a lot of people cannot afford that in the first place, let alone with the rising increase in interest rates, and they're going to be paying that much more on their monthly payments. So it is something that a lot of people are not diving into as much now. Townhomes are up 21.5% from this time last year, and condos are up 15% from this time last year, but we are still seeing decreases in their prices. But again, townhouses and condos are seeing a very small decrease right now in comparison to detached homes, just because that is a busier price point that more people can afford. So there's still a lot of buyers out there that are trying to get something, and the interest rate change has not deterred them. And so, or maybe they can't afford as much, so they're in the lower price category in terms of what they're going after. Okay, so that's all kind of the stats in terms of what happened in June. So where are things about to head? So again, just very quick recap. Sales are down 35% and just down 18% just from last month alone, but inventory is up only 2.5%. And in just a couple of days, well, maybe in a day when this video gets posted, we will have very likely across the board, it seems pretty accepted that the Bank of Canada is going to release a new interest rate hike of 0.75%, which is going to bring that overnight rate up to 2%. So that is going to make a big difference. Some people on variable rates will see some changes in, even if they're on a fixed variable rate, may see their monthly payments change there as well. And it's just getting more and more expensive to be able to borrow money. Now, as a result of all these increases in interest rates, a lot of people have taken the sit back, I'm going to watch, wait, and see what happens in the market, because I don't want to dive in right now. And, you know, it looks like prices are going down. I don't want to pay more than I have to for a home, especially if prices are coming down. Yet at the same time, prices are coming down, but interest rates are going up, so the cost of borrowing is more. So while prices are going down, you can't afford as much. And so you're going to play that teeter-totter back and forth in terms of what is possible. Now, as we go into the summer season, it's typically, like I said, the second slowest season of the year, next to right around the Christmas holidays. And so we're typically probably going to see the sales volume and the prices continue on a downward trend, especially with this new increase in the overnight rate of 0.75%. Now, those who bought in the last 6 to 12 months, this really hurts because you purchased at the peak and you're starting to see these prices come down a fair bit. And there is this 0.75% increase in interest rate is going to see typically another further decrease in purchasing power and prices by around the 7 to 8% range, which is basically going to mean overall prices will be reducing 15, maybe even up to 20% reductions from where they were at their highs that we saw over the last year. And so just to keep this in mind though, that again, just like the stock market is taking a big hit right now as well, the trend long-term has been going up. And there's so many economic factors that come into Vancouver to make it such a stable environment for real estate long-term that there is a very strong card to play. Every situation is different. So you got to talk to your realtor, talk to your mortgage broker, talk to your financial accountants. But there's a very strong game to be played by doing a long-term hold on your property. In the past, when markets have dipped in the Vancouver area over the last 15 years, it has taken, once it's hit the bottom, it has taken an average of only 12 to 18 months to bounce back to where they were in terms of baselines. So just keep that in mind that yes, we are on a downward trend, but it is only taken in the Vancouver market over the last couple of decades 12 to 18 months to bounce back. So that is not a very large time frame. I also just released a video recently on the YouTube channel as well on how you can win in real estate in 2022. And there is a very, very strong case to be made for the pre-sale market. And there are just some factors that are coming in when you come into construction cost, immigration, that is just making that look. If you want to dip your toes into the market and not have to have the mortgage payments at the rates where they are right now, that can be a very strong market. But if you want to talk more deeply or view all the details in that video and then reach out and let me know and we can have a chat about that. Now, having said all that, basically, it is looking like in the States that there's the rising interest rates have started to affect inflation already, and at how aggressive the Bank of Canada has been. They didn't do anything for a while, and now they just shot up the interest rates. And we are starting to see the effects of this rising interest rates having some downward effects on inflation slightly and consumer behavior, which is exactly what they were wanting to do. A lot of people will say that the Bank of Canada should stop right here and not do this 0.75% increase, but they're really trying to ramp in inflation as much as they possibly can right now. And so they're going to be releasing that 0.75 very likely on Wednesday, July 13th. And that will further put pressure and changes on consumer behavior. Now, because they are ramping it right up and they're continuing to just go strong and basically counteract the pendulum swing of super low interest rates and now are really ramping back up to try and fight inflation, is very likely and is pretty widespread across the board so far among economists that you will likely see interest rate decreases and interest rate cuts happen in early to mid 2023. Now, what that looks like, anyone's best guess, because this is the government and the Bank of Canada that we're talking about, and who knows what they are going to do. But that just gives you a potential idea of what to look for in the future, and when things might start to change in terms of interest rates and when your purchasing power may start to increase. All right. If you have to sell, I really just want to hit it home that you have to adjust your expectations, because the numbers that you would have got in February and March of this year have come and gone, and we are not there. Properties are sitting on the market significantly longer, and you're getting offers with full subjects. Even if there's competing offers, it's competing offers with full subjects for the majority of places. Or you're just gonna be sitting there with not getting any offers at all. So you have to be, if you have a short time window where you have to move or you need your place to be able to buy another place and you have a certain window, you have to price competitively and very strongly and competitively, because with these rising interest rates, a lot of people's budgets have drastically reduced because their buying power has reduced. So if you're selling, make sure that you are pricing ahead of where things are going right now, because that's the only way you're going to sell in a specific time period. Otherwise, you're going to be trying to catch up and you're just going to be waiting for a very long time. Buyers, take your time, right? Wait for the deals. There absolutely are deals out there, and you just have to rely on your realtor knowing the market, knowing the new things that are coming up on the market, and being aware of what some of the off-market deals are and where some of the other kind of gems in the rough can be found. And you just have to be on top of things on a regular basis. And you know what? Go in strong with your offers, right? Go in absolutely below, especially if there's not a lot of other competition that you're having, and you can absolutely win strongly in this market. And there are different ways to do that depending on what type of product that you're looking for and areas and competition and everything. So that is it for the real estate market and recap for June stats. If you have any questions at all, absolutely reach out. Jonathan Lerner, you're a Vancouver-based realtor serving the GVRD, and I'm sponsored and working with the Vancouver Life Real Estate Group and eXp Realty. If you have any questions at all, please reach out, send me a message, and we will absolutely get those answered for you, and just find out what your specific situation is and whether or not right now is the right time for you to make a move or stay put. All right, have an amazing day, everybody, and happy real estate days.